Hi, everybody. Jared Johnson here. Let's talk a little bit about what's going on in the stock market. We've seen a lot of movement. Monday was like a bloodbath of all bloodbaths. We saw a huge down movement in the S&P, pretty much in all stocks everywhere. Because we're seeing a lot of this news swirling around, right? Are tariffs going to cause a massive recession? Are they going to throw the U.S. into some terrible economic situation? Whatever your opinion may be, the goal of this video is for me to share with you my recession signals. We've been seeing and hearing a lot about recessions over the last couple of years with very high percentages of convictions, right? For example, we heard the biggest banks, Goldman, JP Morgan, and so on, saying 70, 80, 90% chance of recession in the next 6 months. We've heard this multiple times over the last kind of 3 years. No recessions happen. Maybe they were ahead of the curve, maybe not. But here are my signals that I look to use when trying to determine if a recession is coming. Let's have a little peek at the charts. So chart number one here, we've got copper. These are copper futures. Now, what this is telling us is copper has always been a great indicator of economic health. Copper is used for a lot of things related to manufacturing and production. But what copper really kind of tells us are things being built, are things being produced. It's a big economic health indicator for the US, and it's actually a pretty good one for China as well. So when we look at these two things, that means production is underway, right? China obviously is the world's factory, at least at this point. And so when copper is doing good, that's typically a good economic health sign. If I look at this chart right here, I say, copper looks pretty good. A bottoming out here kind of early January of this year, and it's been going up pretty steadily nonstop. So that's kind of a pretty positive signal for me. So I look at copper, number one. I certainly like to look at material stocks, anything that has steel, aluminum, copper, of course, in it, and those are helpful. But also another one that is big for me is this, Caterpillar, right? Now, if you look at Caterpillar, you say, okay, well, since January of this year, over the last month and a half or so, Caterpillar's down. How much is Caterpillar down? It's down a little bit, right? It's down 17% since the beginning of this year. But if we look at the bigger, longer-term trend here, it's been a little stuck for about the last 10, 12 months. And so that's telling us that there is some hesitation, but it's far from any kind of a downtrend right now. So Caterpillar, the guys that produce the heavy machinery, right? Are things being built? Are these things being bought? This is a big indicator for me of economic health. Deere, also, John Deere, the Deere company. I look at this one and I say to myself, same thing, right? Are people buying heavy equipment? Is heavy equipment being purchased? Pretty steady uptrend. We had this kind of bottoming out in August of 2024, and it's been going up. There's certainly quite a bit of volatility here, big upward swings, mostly earnings related. But overall, it's been in an upward movement. This means pretty good, pretty healthy. A couple other ones I like to look at. Dollar General, right? If recessions are really staring us in the face, these guys are going to get some jolts. They're going to get some bumps. People are going to be looking for cheaper shopping than kind of the typical. Dollar General still at the bottom and not getting its footing anytime soon, right? There's no demand for this kind of cheap retail. Same thing, DLTR, right? These guys are also interesting indicators for this kind of thing, right? Are consumers really heavily looking for discount shopping? Now, of course, in some of the bigger retail, we've had some dips, right? We've seen some of that in Walmart, and we've seen some of that in Costco. But that's really, in my opinion, a lot more of a profit taking with a little bit of a scare, right? We've seen very, very high prices on these stocks. And so, what better time than to start talking tariffs and so on to get a little bit of spooking happening and a little bit of a pullback. But really, if you keep an eye on these charts, CAT, copper, Deere, dollar related retail, These, in my opinion, are much better, much more accurate, much more timely indicators of what is really going on in the economy. Hopefully that's helpful for you. Good luck. Good luck navigating these markets. They're going to be a little bumpy. Hang in there, but I think it's all going to turn out in one way or another. Good luck, guys. Take care.